company which has selected us to transform its product validation, sustained experience with GenAI. HCLTech is going to be leveraging its AI capabilities and frameworks to provide the next-gen tools and services along with the complete life cycle of product engineering, support services. This is to enhance customer experience, reduce cycle times, and of course, optimize cost. There is another tier one mobile telecom company in the US which has selected us as one of their top strategic suppliers for a full spectrum of services. This is from digital transformation, cloud strategy and adoption, infrastructure upgrade, product development, and managed support services across a period of 5 years. We also signed up with a US technology company, which actually has now selected us as their strategic professional services partner. It's helping drive the product adoption, enabling business growth. And what we will be doing is providing them product implementation, cloud migration, site reliability engineering, and many other associated services to their global marquee customers. And finally, we have another US enterprise software provider who has chosen us as their strategic partner and exclusively to set up a Gen AI powered TAC, which is a technical assistance center, in enhancing the operational efficiency and delivering improved customer service. And I think to summarize, all this is what makes us optimistic about the growth opportunities that lie ahead of us, which is where we continue to invest in newer technologies and innovation that is allowing us to keep our clients ahead of the curve. Thank you. Ram, over to you.
Thank you, Anil. Good evening, everybody. FY24 has been a fantastic year. CVK already covered the people metrics at the annual level. I'll probably add a few more details to that. We ended the year with 227,481 is the people strength. This quarter, we added 2,725 people, and overall, on a full year basis, that's an addition of over 1,500 people net addition. Perhaps one of the years where we've sort of bucked the trend to have net headcount addition through the year. This quarter, we also added more than 3,000 freshers. On a full year basis, 12,000. So that program of adding freshers continues through the year. There's been no change to the plan that we set out at the beginning of the year. Attrition this quarter at 12.4%. Again, one of the metric where we continue to trend in the right direction over the last few quarters. So while we talk about matrices, it's also important to look back at the full year. We put in a lot of effort and investments in trying to upgrade the number of people practices that we run within the organization, launch a number of new programs. All of this is adding up to the kind of recognitions that we get for the work that we are doing this year. We had more than 12 awards for a number of different things, ranging from being a top employer to diversity to learning initiatives and so forth. The most satisfying one is to be recognized as a global top employer across all the geographies that we operate. Across 21 countries, we are recognized as one of the number one top employer in the ID services space. And these are countries that cover where more than 95% of our employees work out of. So that's a very satisfying year for us. The other significant initiative that happened through the year is to democratize the upskilling program in the organization. We have always been focused on upskilling, but we made a shift to completely democratize the way we target upskilling efforts in the organization. That resulted in nearly 10 million learning hours through the year. More than 160,000 employees, unique employees, getting upskilled and trained and certified in a variety of skills in demand. This was reviewed and assessed by a number of external firms. If I just call out a few things, Avasant looked at the efforts that we put into upskill people on digital skills and recognized us as a leader in digital skills training that we have done. Everest Group rated us as a leader in talent readiness for next-gen skills for IT services. Some of the efforts that we put into democratize learning and learning journeys that we drive in the organization is reflected in our readiness to serve our customers better in the future quarters. So that's an important call out for this year. One other thing which I would like to call out is back in July, we had to take some difficult choices at that point in time. One of the difficult decisions that we made is to skip a pay review cycle for our mid and senior management colleagues. But looking back at the full year and the performance that we have for the full year, we revisited that decision. I'm happy to say that we decided to include our colleagues in the mid and senior management also through the pay increase cycle, which took effect this quarter. So that's another thing that happened, which is a reflection of the a good year that we had. So that's a brief summary on the activities that has happened in the organization on the people side. We can open the floor for questions.
Thank you, Ram.
Siddharth, over to you.
Sure, Ashutosh. Thank you, Ram. We will now be opening the floor for question and answers. Ladies and gentlemen, in case you are on a computer system and want to ask a question, please click on the raise hand icon on the bottom right of the participant panel and we will unmute your line. In case you have joined on audio only, please press *3 to raise your hand. And if you experience any technical difficulties, you can message your question using the chat box. Our first question is from Anisha from ET Now. She has messaged in the chat box. The questions are for CVK, Prateek, and Ram. CVK, you sounded fairly confident in Q3. What changed that led to a weak guidance for FY25 now? And the second question is, how much was Conviva contribution in revenue? For Prateek, from 20% margins to sub 18% this quarter, walk us through the margins push and pulls. Going forward, what levers you see for margins? Will Q1 see you come within the guided 18 to 19% band, or will it be a lot more lopsided for H2? And the last question is for Ram. Fresher hiring target for FY25. Will you be going to campuses this year? Thank you.
So I will start with the first question. Thank you, Anisha. On the revenue guidance, we continue to remain quite optimistic about the opportunities ahead of us. From Q4 to as we get into FY25, some of the large deals that we won will move into a global delivery model, and that will have some reduction in revenue. Apart from that, we believe still we have a strong momentum in a lot of areas. Now, when all of that is also factored in with the macro environment, our assumption is will continue to be similar to what we saw in FY24. So factoring all that, we have given a guidance of 3 to 5%. And as you have noticed, in FY23, we had the highest growth in our services business this year compared to everybody else in the industry. This year, again, we have an industry-leading growth. So I think we have a balanced portfolio which will deliver in any kind of economic scenario. So we have taken all the factors, and we think we will continue to lead the market in terms of growth. And margins, over to Prateek, and then.
Yeah, CVK, thanks. Hi, Anisha. So Anisha, the simple answer to your question is really seasonality in one word. As you know, our software business has a peak in the December quarter, and that is how we were kind of near 20%. And our continuous guidance for the new year FY25 continues to be at the same 18 to 19% band that we had for the previous 2 years. So there's not changing. I don't want to specifically comment on Q1 or any quarter upfront for the simple reason we never do that. And secondly, given what CVK has already mentioned, that there is an impact in Q1 that we are seeing, and therefore I would hold the comment on that. Thank you. Ram?
So, Anisha, as I mentioned, freshers, at least FY24, we continued with our plan. Even Q4, we added more than 3,000 people on a full year basis, more than 12,000 people. That's the kind of range in which we planned for FY24. FY25, we expect it to be along similar lines. Probably 10,000 plus is what we are planning for as fresher addition for FY25. So which means that we continue to pursue our campus programs as well as our fresher hiring programs. The spread across the quarter for these additions will take it for each quarter, depending on how we see the demand move through the quarter. But the full year plan is very similar to what we had in FY24.
One last follow-up question to CVK from Anisha. What will be the impact in Q1 of shift to global delivery model? Thank you.
So, Anisha, I don't think we will call out too much of specifics, but we usually have a certain seasonality in Q1, which is what you would have seen in many of our past Q1s, and we expect it to be a little more than that.
Thank you, CVK. Our next question is from Shavik Das from Mint. Shavik, please go ahead.
A few questions. There were 2 new 100 million plus clients.
Shavik, can you be a bit louder? Your voice is very feeble.
Hi, is this better?
Yes.
Right. CVK, this is for you. There were 2 new 100 million plus clients in the fourth quarter. And yet the overall guidance that we see for next year is, of course, in fact, lower than this year. Is it safe to assume that the execution of deals remains slow even now? And also the BFSI vertical, as well as North America, which is the biggest chunk of the revenue, and which many of your peers have spoken about weakness in, they seem to have grown for you. So could you offer some color in terms of how you are reading the deals situation in these particular markets? And yeah, that's about it.
Yeah. So as you rightly called out, North America and financial services, they are the largest IT services spend segments. And as you can see, we have done very well in North America. We probably have delivered a significantly better growth than anybody else. It's also the highest growth for us. So we have very strong momentum in North America, and the same is true in the last year for financial services. And our $100 million clients increased year on year by 3. And that is the reason we've grown 3% sequentially in Q4. And that also contributes to the full year services growth of 5.4%. So that's the revenue that we have recognized over the last 12 months in those clients. So I think there is no correlation between, in fact, all of that has been possible with very strong execution of all the large deals that we won, which includes some of the hybrid cloud transformation and some of the other digital transformation that we are working with our clients. So I think that explains the client categories. And there's another question for you. Okay. Yeah. Thank you.
Thank you, CVK. Our next question is from Shivani from Business Standard. Shivani, please go ahead.
CVK, question to you. You said that a lot of traction in AI and Gen AI deals. Is it time that HCL wants to quantify the Gen AI deals that are coming in? Is it possible? Can we look at it? Ram, for you, you did mention that you have reinstated the salary cuts that you announced in June quarter. I wanted to know, in terms of salary hikes on an average, what it would be for the appraisal season that's going to come in.
So on Gen AI deals, I think at this point, its contribution to the overall revenues is very small. So I don't see a point in calling out revenue. And of course, there are multiple dimensions to the revenue. There are a lot of I see two broad themes where we are seeing good traction. Those revenues may not really come in as Gen AI revenue. There are a lot of clients who have given us the opportunity to implement Gen AI capabilities using our AI Force platform and provide them the software engineering productivity benefits. So that comes with general software development work, and then we don't think it's appropriate to call that as Gen AI. But of course, all of that is influenced by Gen AI. And of the 15 plus deals that we won in this quarter, more than half of them would have had some Gen AI influence in really shaping that particular deal. So at this point, I don't see any meaning in calling out specific revenue, because there are two categories. One is direct Gen AI related revenue, and a lot can happen in the Gen AI influence category. So I think you should look at overall growth, and we will continue to report our digital growth as well, and Gen AI will be part of our digital growth. I think that should continue to give you a good indication on how we are progressing.
Thank you, CVK.
Yeah. The pay increases, if you look at in FY24, in a typical year, we would have done all the pay increases in one cycle. In FY24, we did it in two cycles. We first addressed our larger employee population, what we call as employees in the E1 and E3 bands. So that largely covers about 90% of our employees. So that went through the regular cycle that we do. It's the 10% in the mid and senior management is what we took a decision to skip, which, as I said, given the performance for FY24, we decided to revisit that and include them also in the increases which we did this quarter. In terms of the average increases, it has been in the same range as what we have done in the previous years. So there's no difference to that. It's always a case of how we treat our top performers. Our top performers continue to get double-digit pay increases, and that has also been the same as what it has been in the previous years. I think your question also included what's the outlook for FY25. We're just coming out of FY24, and our pay increases cycle typically are through the mid-year and the later part of the year, so that we will plan for as we go through the year. So I don't have any specific guidance to give for that, because that's at least a couple of quarters away.
Thank you, Ram. Our next question is from Beena from Economic Times. Beena, please go ahead.
Exactly would be the subcontractual cost, given the whole attrition is weaker and it has reduced further. And if you could just give us a sense on contractual hiring going forward, while you mentioned a bit about fresher hiring, and what was the target for fresher hiring last year?
Yeah.
So, Beena, there are two parts to your question. One is on the freshers, another is on the contract hiring. Since I've already spoken about the freshers, I probably touch on that. When we started at the beginning of the year, we were targeting about 15,000 odd freshers on the ballpark. That was the go-in plan for the year. We finished with more than 12,000. Given the volatility that we had through the year, we had to recalibrate our fresher hiring. So that's broadly close to the plan. So there's not been a significant shift to that plan, which is what we expect to see in FY25 as well. So far as contract hiring is concerned, it is always very tactical in nature. It is all driven based on how the demand is fulfilled internally. Only where we cannot meet demand internally, we make a tactical call for contract hiring and contract fulfillment. And during the course of last year, we did see a drop in the need for contract staffing, and that shows up in the spend as well for contract staffing. Looking ahead into FY25, our approach is going to be the same. Our approach is going to be more focused on internal fulfillment, and we build a capacity for that, and we invest in our skilling efforts to meet that goal. So contract staffing will continue to be tactical in nature, and it's just going to support the demand that we cannot fulfill internally. So that, as I said, as an approach, that will continue.
There is one additional question from ET team for CVK and Prateek. The question for CVK is, you have backed 73 large deals in FY23, in FY24. Will that put more on-site employees and put pressure on margins this fiscal? And for Prateek, could you throw more colors on the dip in margin, though we know that seasonally factor played a role in Q3? Thank you.
I think the deal wins and on-site employee count, I don't think there is any direct correlation, because most of the solutions that we build in all our large deals is a global delivery and global execution from onshore, nearshore, and from India. So I don't think there is any direct correlation. And first of all, a lot of deals that we have won in FY24, most of them have been already executed, or they're probably in the final stages of execution, especially the deals that we won in the previous quarter. Only that will kind of provide the momentum in the coming quarters. So the second question, over to Prateek.
Yeah. On the margins, I think, you already referred to the seasonality, which I talked about earlier. So if I look at just the services part, which does not have the seasonality, which is basically in the software business, that is a decline of about 70 basis points. And there are two main points in that. About 50 bips is basically because of the increment. So Ram talked about the extra increments that we gave beyond what we had planned and actually announced publicly. And there was some small forex also, which leaves the balance as all other things put together. So there's not much that to really explain there. Thank you.
Thank you, Prateek. The next question is from Debangana Money Control. Debangana, please go ahead.
Hello, gentlemen. My first question is to CVK. CVK, rest of the world or emerging market revenue has been declining. The company just announced a deal with State Bank of India. So, do we expect, the emerging market focus to increase as well in FY25? What's the outlook there? And I have a question for Prateek. Prateek wanted to understand what levers are in place for margin improvement in FY25, because even your peers like TCS and Infosys's management has been talking about price hikes could possibly be one of the key metrics to improve operating margin in FY25, given the ongoing inflation. Is that something even HCLTech will be looking at? I had a question for Ram. Ram, you just indicated that fresher addition would be similar to that of FY24. So can we say it's going to be in and around 12,000?
A lot of questions, so let me get started. First is ROW. Yes, our revenues declined in FY24, but our outlook in FY25 is very promising for ROW. And we continue to enhance our focus in ROW, which is what we call as rest of the world, which is emerging markets. So you should expect to see good growth in rest of the world for us. And State Bank of India is a deal that we announced. Of course, it was not a last quarter deal. It is a deal which we signed in the last few days. This is HCL software program where we will be will be our MarTech stack. What is really driven around HCL Unica platform is what we will leverage to deliver customized experience for the bank customers. And this is a very transformational program at a very, very large scale, probably one of the largest scales in the world. And we are really proud to be a partner for SBI in this big transformation program, powered by HCL Unica software platform. And I'll hand it over to Pratik on the margin levers and the price increases.
Yeah, sure. So, Devang,